One thing I wanted to point out is a big move in the cotton market today. Let's take a peek at what's going on here. And on the big board, we have December cotton up 182 points. Wow, 72.70 is the last trade. The March contract now up 113, and it is now at 74.09 cents per pound. So look at that with that December now up above 72 cents by a long shot now, once again, after getting down around 68 cents here last week. Canola market today, wanted to point out, we have the January contract now getting $4.30 in Canadian currency. We're trading at $5.80 per metric ton. March is now up $3. Well, let's move on to our live cattle trade and see if they're continuing that uptrend this morning. We sure are. December live cattle up $1.22 at 109.32, and look at February, $1.50 higher at 112.15, and the gains are even bigger if you go further out on the feeder cattle market this morning. Here you have the January contract, $2.72 higher at 137.32. All the months are at least $2.50 higher, except for the August out there. That's up $2.42. On the lean hog trade, you currently have the nearby December gaining $2.17 at 66.30, and February up $2.90 now at 68.25. Looks like it touched the limit up at one point. Boy, all kinds of enthusiasm here in the livestock trade while the grains are kind of falling flat. Maybe you have an explanation for the way they're acting today here, Oliver.
Well, a lot of green on the screen, which is a good way to start the week, especially after how we finished last week's trade, in particular with these cattle markets. We saw the live cattle fall sharply Wednesday, Thursday, Friday. Managed to rebound a little bit on Friday as you saw some traders square things up ahead of that cattle on feed report, which had a little bit of a friendly tilt. And I think that the bigger cause for concern was last week the rumblings that there could potentially be plant disruptions. We didn't see that confirmed through slaughter numbers, and we continue to believe that the broader fundamental landscape remains friendly for the live cattle contract. So I wouldn't be surprised to see this February futures market continue to work a little bit higher. If we can get a conviction close out above this 112.50 level, I think that we could go back, retest those highs from the beginning of the month a little closer towards 115.5. There's also a gap up there. From that point, I think it's going to be a tug of war between the bulls and the bears here in the very near term.
When you look at the feeder cattle charts here, how closely do you think that they're going to have to mirror what's going on in the corn market?
Well, we've seen a little bit kind of a decoupling here over the last couple of months, kind of trading on their own. But we are seeing feeder cattle come off the lows, and I think a large part of that is, as mentioned, with the feeder cattle. We were just so deeply oversold in the back half of last week's trade. We held some key support levels and are continuing to work a little bit higher this morning. But over the last about two and a half weeks, we have been posting lower highs. So that's going to be a bit of a caution flag in the near term as far as upward mobility. 139.5 is a key Fibonacci retracement level. That's going to be the line in the sand that the bulls want to get back out above with some conviction to keep that train going in the right direction.
Very good information. Thanks, Oliver. Oliver Sloup of Blue Line Futures joining us this morning. Janet?